Hello and welcome to IPO Watch with me, Stacy Pereira. Now, among the 4 IPOs opening for subscription this week is Gandhar Oil Refinery India, and we are going to be talking about how it's looking to raise 500 crores from its IPO. Now, remember, the issue comprises of a fresh issue of equity shares worth about 302 crores, whereas the OFS, or offer for sale, of about 1.17 crores by the promoters and its existing shareholders. Let's discuss what they really plan to do and where they're supposed to be using these funds. Joining me for that is Mr. Ashlesh Parekh, the Joint Managing Director at Gandhar Oil Refineries India. Thank you so much for speaking with us here at Moneycontrol. Let's first get to why the plan to go public now and what really distinguishes your company versus your peers like Privi Specialty or even Rosari Biotech at this point. What is your USP for that matter?
Good afternoon. Yes, so we are, going public. Gandhar Oil is going public. Just to brief you on what we are, basically, we are the largest manufacturers of white oil in India and one of the top 5 players globally. So the revenues of the company are divided into 3 categories: the personal care, healthcare, performance oil division, the lubricant division, and the process and the insulating oil division. But at Gandhar, the focus of the group is on the personal care, healthcare division, which contributes to 55% of the revenues of the company. We are planning to do a fundraise of a primary of around 302 crores. The utilization of this 300 odd crores is, across various fields. We are planning to do a term loan repayment of our UAE subsidiary under the name of Texol, which is around 23 odd crores. We are planning to do capacity expansion in our facilities in India worth around 28 crores. Balances of working capital of 185 crores and GCP of around 66 crores. Having said that, as we are the largest manufacturers of white oil in India, the diversified customer base we have includes multinational murky FMCG customers like Unilever, Procter & Gamble, the Indian FMCG companies like Marico, Imami, Dabur, Bajaj, and so on. So we are, present in lots of Indian multinational customers and global multinational customers. Having said that, we have more than 3,500 set of customers, and the strategy at Gandhar and the growth strategy at Gandhar is to focus on its personal care, healthcare division sector, grow with the customer, expand across the geographies. So we at Gandhar, 40% of our total revenue is generated from overseas business. So we are exporting across the globe to 100 plus countries, including Europe, US, South America, Africa, Australia, and so on. So if you look at our export revenue, the overseas revenue, that Gandhar had achieved over the last 3 years, from FY21 of 741 crores to FY23 of 2,100 crores for a total revenue of around 4,000 crores in FY23.
In fact, I was going to speak more about your financials for that matter. Now, what explains this doubling of revenue from 2,201 crores to 4,079 crores in FY23? And do you think the similar momentum can be maintained now that you're even going public? And what about your top line CAGR? What is really expected in the coming 3 years if you have to take that as a comparison? What are you looking at?
See, the focus of the group is, to expand its customer base, expand across geographies, and grow with the customer. So these are the three broad strategies with Gandhar is specifically focusing on, to maintain its run rate. Having said that, with the customer profile that we have, with the clientele that we have, and with the expansion plans in place, we are, quite optimistic in terms of the volume growth we want to achieve in the near future.
Also, do speak to us a bit about, you mentioned 40% is revenues coming from export as well as those marquee clients that you have from the FMCG space. Any kind of headwinds that you see because of exports, first of all, and also with consumption demand really, not up to the mark here in India itself?
See, FMCG is growing at an run rate of 6.5%. But if you see white oil as a sector, is expected to grow in a double-digit CAGR of 10% in next 5 years, as per the CRISIL report. So, we are, at Gandhar as the largest manufacturers holding a 26% market share in India and one of the top 5 players globally. So, as I informed you about the strategy at Gandhar, we would really want to focus on this specific sector and also grow, within the customer and across the geographies. So, with the combination of the right quality of customers, strategic tie-up with our suppliers as well, we are well poised, to take care of the run rate of the industry, which is growing, which is around 10%, specifically for the white oil segment.
Well, the run rate for the industry is quite constant, but if you have to look at your margins, they've been pretty stagnant around that 6 to 7%, at least for the past 2-3 years. So, what are you expecting going ahead? Is this likely to improve, and what really could be those growth levers to take this ahead?
See, we are expanding, we are offering a new and customized product to our valued customers. We have more than 3,500 set of customers, and we want to grow with the customers. Apart from that, if you see, we are, doing a fundraise, we are doing a fundraise, for the growth plan of the company. Apart from that, obviously, some amount of money is being used for term loan repayment. Obviously, that will help in increasing the profitability of the company. If you do the maths, obviously the interest cost and help, would definitely envisage to come down because of this fundraising.
So let's talk about a little bit of where these funds are going to be used. The fresh issue, like you said, is earmarked also for a range of initiatives, one being the repaying of Texol loan from Bank of Baroda, and also funding your working capital requirements. General corporate purposes is also why people normally take the IPO route. But what exactly, and could you break that out for us? Are you going to see expansion in that Silvassa plant of yours, or more on the Taloja petroleum jelly and white plants? Where exactly is this money going to be distributed into?
Sure. As rightly informed, we are doing a term loan debt repayment of around 23 odd crores for our Texol plant. Apart from that, we are doing capacity expansion, for our Taloja facility by 100,000 KL through internal accruals, and a part through, proceeds of this issue for our Silvassa facility by 18,000 KL. So today, our total capacity, across the three plants put together, two in India, one in Dubai, is around 522,000 KL, which is expected to grow by around 22 to 25%, in by end of March 24.
Right. Can you talk a little bit about the capacity utilization? Like you mentioned, you're also present overseas as well. So, where exactly and what are we on what basis, or the level of aggregation that you can really put this to, and also how much presently and how much you intend to improve this utilization in the coming, going ahead?
See, the Indian facility, we are around 92 to 93% utilized today. Having said that, we are doing capacity expansion specifically for in the Taloja plant by 100,000 KL to, to fund our growth, to aspire our growth volume, specifically in the personal care healthcare division. So the capacity in India is expanded by around 118,000 KL putting together the Silvassa facility. And for Texol, the capacity utilization today is as of from 65 to 70%, which we want to go up, in next 1 or 2 years, which we want to, bring it to around 90-95%.
Right. Well, if I have to do a comparative analysis with your peers like that of Savita Oil or even Panama Petrochem, your ROEs are pretty much similar in those lines. Is there a reason of how this could, improve going ahead?
See, we at Gandhar, are focusing on, not only, working closely with our customers, growing with the customers. We aspire to increase our revenues, with the model that is in place in terms of the customer matrix. We want to grow with the customer, expand with the customers. Having said that, we would, at Gandhar specifically, would like to, would maintain, the inventory levels at around 30-35 days, vis-a-vis the industry. So, this is, one of the differentiating factor of Gandhar vis-a-vis others. And apart from that, if you see white oil as a product, is primarily used in the pharmaceutical healthcare category, which is, growing at a good run rate, where we want to, where we as a group would like to focus.
Right. And what about your anchor book? What kind of, interest did you see coming in there, especially that it opens tomorrow and also comes at a time where you're seeing other four IPO, literally the primary market pretty, packed up, one would say. So how is one supposed to be, differentiating between you and the others that are out there in the market, or at least those hitting the Lal Street this week specifically?
Yes, I mean the anchor book is open today, so obviously the list will be out by end of the day. But having said that, we had extensive round of meetings with lots of anchor investors, and lots of good response has been generated by lots of mutual funds, FIIs, and hedge funds as well. So by end of the day, the anchor list would be out to the media as well. We are quite hopeful in terms of a good anchor subscription as well.
Right. How about the grey market premium and what you're picking up from there? And do you think it'll be able to live up to those levels? And how are you looking at the street given the current market scenario as a whole? We're seeing quite a bit of consolidation in the Indian markets in general. So, would the timing be right for your IPO then?
Yeah, absolutely. Right now at Gandhar, currently, we are busy, very busy in terms of the listings. The media interviews and all are going on across the day. So really not looking at the GMPs, but obviously at Gandhar, we are focused on growing the company, and ensuring the strategies of the company are in place for the future growth of the company.
Right. Well, Mr. Ashish Parekh, it was really great that you got on the show and gave us the perspective of where you're seeing this IPO really list. But Gandhar Oil Refineries that is looking to list will open for subscription tomorrow and is looking to raise about 500 crores via its IPO. Well, we'll have to wait and see what kind of subscription it gets once it's open. For all those who are tuned in, thanks so much for watching.